Actually, before we start, do you just want to introduce yourself, the organisation that you run, and yeah, a bit about yourself?
So I'm Emma Lowe, co-founder and managing director of Lowe Living. And I guess before I started the business, I had a significant background in corporate marketing. So a lot of my lens in terms of the way I'll be talking today will be more about marketability. But I guess for those of you who don't know what we do, we are a boutique luxury property developer that develop medium density residences for discerning owner-occupiers. And I guess we're really guided by sort of 4 key principles of design, quality, client experience, and brand. So because of that, we are a vertically integrated business, meaning we have our own construction company so we can build our own product and control that quality. And we also have our own real estate business so that we can control that entire client journey and really talk to our clients in the way that we that is on brand for Lowe Living. And I guess the reason why we started the business in the first place was because we really wanted to create incredible product for not only residences to enjoy, but also for the community to enjoy. And I just want to say that I think it's our obligation as developers to create really great architectural landmarks for the community to enjoy for years to come.
Welcome.
Hi, Mike. Lachlan Thompson, CEO of Goldfields Group. Goldfields Group, private company, been around for the last 15 years, and we're a truly multidisciplinary company operating out of Melbourne, Sydney, Queensland, Adelaide and Perth. We pride ourselves on being multidisciplinary. We find that crossover in markets makes us better developers in each individual sector, if that makes sense when you extrapolate that out. But right now we're active across build to rent, build to sell. We've got a very large master plan communities business, which has got 6,500 landlords across Australia. We recently sold a big site up in Queensland, which made news, which was a really good, everyone thinks it was an overnight success story, but it was 7 or 8 years in the making. So that was really handy. We've got some hotel acquisitions on the go at the moment, one that we've just completed towards the back end of last year in Perth. And we've got some industrial and retail under construction at the moment too.
And maybe the best bar in Melbourne on the top of Goldfields Tower.
And hospitality, yeah. I've seen you there a few times, Mike.
Thanks, Lockie. You make me feel like we're quiet. Daniel Fagan, director of Hirsch Faigen, also a private development company, Melbourne-based, went to Gold Coast and COVID, just started our 4th project. On the Gold Coast, Tower in Broadbeach actually being built by Maxcon, a Melbourne builder. So that's an interesting story, getting a Melbourne builder up to Queensland to overcome some of the construction challenges. Currently have 140 apartments in Queens Road under construction and another sort of 140 in planning in South Melbourne through the ministerial pathway. I guess Gold Coast has been a good story for us since then, and coming back to Melbourne and we think that we can get them done. So hopefully the market improves a bit.
Awesome, right. So the first site is 60 Denmark Q. We're looking at the Development Victoria site, so former VIC Roads. Couple of 20,000 square metres, so it's a big project. Maybe we'll kick off with you. Daniel, what do you reckon?
Yeah, so I reckon it's bigger than where we like to do. We're sort of call it sub 200 apartment space. Look, if I compare where we're up to in Queens Road, we've successfully sold, say, 75% of those through national channels. The cheaper 1 and 2 bedrooms haven't yet sold a 3-bedroom, having launched those in January, but 1s and 2s have all pretty much gone. So I look at a site like this, I think, price point, we talked about some of the suburbs that can't sort of catch the construction rate that we're experiencing. Q's not one of those suburbs. Q, we can catch the construction rate. I'd be mindful of how many 3 bedrooms in a project like that. I think one of the challenges that we will face at Queens Road and hopefully overcome is when you're trying to, unlike say Lowe Living might do, which is really boutique, high-end, attract your owner-occupier market. We're trying to sell 3 bedrooms, albeit probably not as high a scale as those, on a floor plate that has 1s and 2s, right? So it's not that true, Lowe Living, Orchard Piper style project. So how is that 1, 2 and 3 bedroom largish sort of scale project going to attract downsizers, owner occupiers? For us, I'd say this was too big, but that would be some of my concerns with that mix of product.
Everything he said. No, you look at the site of this of this size, and there's probably only 4 or 5 natural buyers for something like this. It's capital intensive. Your IRR is going to be absolutely shot unless you can stage settlement, to be perfectly honest. It's a ripping site in a ripping area, and it's a true chance to actually gentrify, not in an area that needs to be gentrified, but actually place, make and create. It's a super exciting opportunity, but it does lend itself to a Lendlease, a Mirvac, a Stockies, one of those groups that probably has cheaper capital than certainly we do anyway. Stock-wise, what you would do there, I subscribe to Centuria, to Dave, to your theory. I think the recovery, and how many times people have asked to talk today about, are we seeing green shoots? I think the green shoot in our space is value-led, and I think it's entry-level product. But this site, given, you talk about rates catching construction prices, we found ourselves in a weird market, and I think these areas lend it that you need to bring that price point up and up and up. And there's only a certain level when you're trying to offer value or get that first homeowner that at 1 and 2, you can't go out there charging $1.4 million for a 1, but it becomes less relevant when you've got 3. So finding that blend of attracting owner-occupier but still getting that volume-led stock, getting the channels in and getting you to pre-sale cover, and then not devaluing what you're selling to an owner-occupier traditionally at the top of the building.
If this site was, say, half the size, what would you think about that?
Yeah, well, I think that what you'll find is someone will cut it up, and you'll end up with, you can see that finger at the top there, for lack of a better term, is probably more a medium density townhouse or homes style, sort of similar to what Lendlease did at Armadale, the Muse there. I think it's going to have everything here. So halving it, I don't think it changes the product type, to be honest.
Cool. And what do you think, Emma? This isn't typically your cup of tea, but what do you like about it and what don't you like about it?
Yeah, so interesting with this one, we did actually have a little glance at it previously when it came on market, purely because I guess when we're acquiring any site, we do sort of have some key categories, obviously outside of feasibility, in terms of what we're looking at. And in terms of for that particular location, forget about the size, but for that particular location, it does, I guess, fit within our typical buyer demographic in terms of we could see some really great owner-occupier, really discerning, potentially downsizers that would live there it's in a really great location close to amenity. But obviously for us, it is too big. And for a project of that size, you would then need to break that down into a different type of demographic pocket. So I would say for us, if it was a smaller boutique style development, we would definitely look at it in that location, but just not at that particular size.
Makes sense. Cool. So now we're looking at 596 St Kilda Road. Maybe we'll start with you this time, Emma.
I'm a Divest again. I probably don't have too many develops on these, but anyway, we'll go through them. So I suppose, I guess in terms of breaking it down into, again, how we would look at acquisition from a location perspective, I suppose I would say it is sort of mixed in with a lot of commercial buildings. There are some residential buildings coming through there, but they're, again, quite large, and you would really need to have some significant USPs, like real hotel-like amenities to go in there. Because again, when we're looking at sort of things like walkability, for example, whilst you've got the lake close by, you're looking over, you've got some parks nearby, you don't really have that really good quality amenity that our type of clientele would look for. The other thing to be cautious with view lines. So I know there was some incredible views from the penthouse, which would overlook sort of the bay and the lake and things like that. You've got to remember that there's risk of build out and that you are wedged in between different apartment buildings. So I guess in this particular market, what we're really cautious with is when we're looking at what the outlook is for all of our projects, it's what is the majority of that outlook, not just for a few apartments, but for majority of apartments. Because what we're finding in this market where people have so much choice, you can't just put a really good quality project, a really good quality design on a site and think it's going to sell. You need to ensure that every single apartment that's in that building has saleability to it. So for us, it's also in terms of size-wise for us, it's just smidges over a little bit too high in terms of what we would do at this point in time and at this market. So yeah, that's my
Is there anything that you could see in the market that would change your perspective with this one?
Maybe if it was further up the road, towards the city, maybe opposite the shrine, down that way, but probably not for us in that particular
Close to the
location.
time and place one.
Maybe, we'll see.
I'm a divest on this particular site, and this might buck the trend. I'm oddly long on St Kilda Road. I think St Kilda Road will enter at some point soon a heyday. I'm probably long on Toorak Road and St Kilda Road, where you've seen a bit of investment. You've seen Kokoda go in, you got Orchard Piper go in. Cbus are doing a great project. We were the underbidder on something that was trading off market with CBRE. I think, and I know this site is challenged. I've had this site under DD and walked away from it coincidentally.
Do you say you had it under DD?
Yeah, a while ago when we were in the process of looking at the Windsor site that we've got under construction at the moment. So for all the reasons, I don't mean to steal it, but it's compromised. Sites that sit there for 2 or 3 years are either priced incorrectly or compromised. This is one of those ones that unfortunately finds itself being, and it's not worthless, it really isn't, but it's so hard, even if you were given this at a well below market price, it is still too hard to take on from a sales risk perspective. You can just never, in a market where we talk about undersupply, and we are undersupplied, but as an industry, again, we've got to solve the why for people to come in and buy off the plan. This site doesn't offer the why.
Interesting. And Dan, I guess you kind of know the area.
We've got a site about 100 to 200 metres from here. 140 apartments. We launched that in, say, end of October last year. We're probably, by the end of this month, we would have sold 100 out of 140, all national, local invested, no furb sales. I agree with what you've said. Like St Kilda Road and Queen's Road has compromised sites, right? Not every site has, whether it's the Bayview or whether it's St Kilda Road View. So you need to be conscious of the kind of product you're going to put there. You can't go and put, 3-bedroom apartments to make your feasibility look good if they're looking 9 metres into the building next door, right? So you need to be realistic. What's made us successful there is giving the market absolute confidence by starting construction at the time you've launched sales, by having a track record of doing that, having a builder of repute in Melbourne. Again, this one's being done by Maxon, who they know can deliver, and having national channels. I think if you were sitting trying to retail a product like this of 1, 2s and 3s in Melbourne, you'd be kidding yourself if you thought you'd have those sold out by the time you're finished. So we were fortunate to have national sort of sales who do see value in Melbourne. Hopefully the government doesn't stuff it up and they do get the capital growth that other states have had, right? So that's what they're coming to Melbourne for. You think about what Lockie said about, we're selling now 1-bedders, with a 7 in front of it. It wasn't that long ago that was a 3 or a 4 in front of it, right? So it's scary numbers. This is a result of all the costs that we know. It's Southeast Water, we spoke about local, federal and state government, like the infrastructure charges, the sewer connection, like it's out of control, right? And you got no negotiation. It's an authority. They give you the bill, you don't pay it, you go to the back of the queue. All these costs, the construction costs, as we know, they dictate that we have to sell things for a certain price. Now, luckily, the Sydney buyers, the Queensland buyers, the Perth buyers, they see value in Melbourne. 1-bedders in southeast Queensland on the southern beaches are $1 million without a car now. So, the 7 something doesn't look so bad. The 3-bedders I said, like we're using Ant Brain, his team, the quality of the leads and Mike and you guys, the quality of leads we've had since January on this for 3-bedders have been great. The conversations are real, but people take their time, right? Like everyone said, we're 2.5 years away from completion. So people have time. They're asking all the questions, and we'll see how those sort of 3-bedders land. But this site, when I looked at that, we looked at this a few times. That Bait Smart scheme may have changed, but my original memory of it is that it was all pretty high-end, large, expensive apartments, and it didn't stack up. So it's about finding that right balance between where you're putting your money and where the 1-bedders are, where the 2-bedders are, because as I said at the beginning, Queen's Road and St Kilda Road has a couple of compromised sides, right? So, but I do think that there's enough activity here. We all know why. COVID, office buildings vacated, naturally made sense to reposition them. So they're all being demolished and new builds are being done. I think I probably agree with Lockie that Lachlan says, it is a bit of a longer term play for most, but we were fortunate to have the Channel Australia Queensland experience to get this sort of done. But hopefully St Kilda Road comes back to the famous boulevard that it should be.
I think when we approach a site too, sorry to go to the mic, we immediately ask ourselves a question, is there an alternate use? So, I keep saying I'm long on St Kilda Road. I think St Kilda Road is a declining office market. We all know that. It's gone from 4 million down to 3 million. I think it will continue to go in square meterage and become a residential market. What that will mean is destiny by demographics and population and employment. People will need to work. I think this site eventually, if the cycle's right, will probably end up being an office building.
Interesting. And I think, to your point, I think, as I said earlier, I think congratulations to Alan and the team at Samuel Property for getting their project away. Louise, I think progress in the market, and to yourself as well, Daniel, for getting the sales way that you have. I think that kind of momentum is what the market needs to kind of bring these sites online and get more inventory going.
Look, I think if we're speaking openly in the room, it's difficult and it's expensive, right? We know that people aren't lining up like they may have been in whether 2017 or the great days you've seen in Sydney. The international buyers aren't really here. So it's an expensive way to sell, but you need to be realistic with your feasibilities and factor these things in, right? Because if you've got compromised view lines and you're trying to achieve, 7 for a 1 and 1.4 to 1.6 for a 2, you need to know how you're going to sell those. Otherwise you can't start the project, and without starting the project, people don't have confidence. The channels don't have confidence it's going to be delivered. So it's a whole sort of waterfall effect. I think Alan did a great job, and we'll see there's a fair bit of activity going on, a fair bit of build to rent. So not everything that we're seeing built is built to sell. I think Mirvac are approaching completion. So hopefully they've cleaned up the balance of their stock, and I think you just need to back yourself in to get the balance of what you haven't sold done during that sort of, call it 2-year construction period.
Yeah, I think for that, both with the Mirvac Albertine project and Louise, I think they've both focused a lot on the brand story around Samuel Property and Mirvac and those sorts of things. So I think those things really do make a big impact, and you guys pushing leveraging the MaxCon brand and things. I think that stuff's critical for getting this stuff going. All right, St Kilda, have we got a bite? For Marine Parade, we'll start with you, Emma.
No. I'm still not developed, but I'm going to say delay. I guess for us, this is probably closest to the sort of site we do develop, and I say that in that we've got something very similar up the road, Katani in Beaconsfield Parade on the other side of Luna Park, I suppose. I guess when I looked at this particular one, I guess I'm comparing the differences between, I suppose, the site that we do have that we're about to launch and take to market versus this one. So our site, which is a little bit further up, we can go up to 5 levels, whereas this can only go up to 3 levels. I will say from a location perspective, I think it's beautiful in terms of uninterrupted views of the water right at the front, and it is behind a slip lane. So even though it's on a busy street, you do have that sort of quiet sanctuary where you can go behind there. The challenges are, there are some planning challenges which you would need to investigate, which there is a flood overlay there. So that sometimes can have a few challenges in terms of height and, perhaps raising building, how you work through that with, I suppose, basements and all of those sorts of things. But I guess the biggest challenge on this one right now is probably the geometry of the site. So whilst you would get some really great apartments that would be facing the water, you will have some challenged apartments that are a little bit behind. So I think in this market right now where clients or our type of demographic, which are owner occupiers, they have a lot of choice and they're looking for 10 out of 10. They're not looking for 9 out of 10. We are really focusing on our acquisition to make sure we tick every single box and not purchase anything that could have some compromised apartments. So I would say for us, this site is really great. I think it's actually sold. I saw a sticker when I drove past the other day. But
there you go, Joel.
Yeah, it is a really great site, but we would probably look at it a little later, maybe when the market picks up and it does become more of a seller's market rather than a buyer's market.
Nice.
Battle axe blocks always hard and made even harder with planning, overlooking, shadowing, things like that when you're on the back of someone's building. But I oddly here, I would delay then develop. I agree with your sentiment. I think it's just St Kilda probably needs to come on a little bit this exact spot. But I think as Melburnians, we probably are only now, the likes of you guys, educating people, understanding the value of true bayside living. It really is sort of the best of both worlds. Everyone left the state to go to wherever they went to be up in the sunshine. They're coming back. They are starting to come back. We're seeing interstate migration positive for the first time in a very long time back to Victoria. And they're looking for desirable places to live near the water. Water's super important. I don't think this site lends itself to resi BTS. I would be looking at this, and I think it's a really good idea to go after a service department and or hotel, boutique hotel. I think you could do a really cool design on that battle axe out the back there and put some amenity through it. And then just a long, narrow service department building. There's a huge undersupply of hotel rooms. And we all know St Kilda during summer is chock-a-block.
We looked at this site briefly. There was issues with town planning, car park access. I guess Lockie's view on hotel may overcome some of those, car parking issues at the site. I mean, it's St Kilda, right? It's iconic. It's bayside living. It's a shame that St Kilda hasn't developed into Melbourne's Double Bay of some sort of reputation. It's a shame what's happened to Ackland Street and Fitzroy Street. You'd certainly think that long play, hopefully, St Kilda sort of comes back to that aspirational sort of high-end suburb, the amenity, the lifestyle, the bay stuff. I mean, it's very unique in Melbourne. We don't have enough of it. So it's a shame that it's undervalued, but we would pass on this one just due to the car parking and town planning challenges.
Do you like it as a hotel?
Yeah, I mean, I actually never. Look, we've done some sort of mixed-use hotel stuff. Last one was in Box Hill pre-COVID. We probably don't like hotel at the moment. I feel like it's capital intensive. I think the highest and best use is still to get your money out and redeploy it. Takes a long time to trade up. I think pretty brand specific, and so we're probably not looking at the hotel space at the moment.
Fair enough. No, I got one more. 10 Ballarat, so Brunswick. I mean, we've seen a lot more demand coming through over the last 12 months for Brunswick, certainly. What's your read on that?
Yeah, we could look at a site like this, but if we were going to do that, we would want to make sure that our channel network was lined up. Like, I wouldn't want to bring a site to market in Brunswick at this sort of price point and sort of hope that the sales solution would come. It would have to be very channel engaged at a very early stage, make sure the prices of the size of the apartments are right. Nothing, going to be small ones, it's going to be small twos, it's going to be price point. I mean, the one thing we've seen through the channel network is that price point is still an absolute factor for everyone around Australia. That sub-1 million will move. Some of the big channels can move, 50, 60 a month. And once you get to 1.5, it drops off a cliff pretty quickly. So I still think there is a barrier to entry at that price point. But the scale wouldn't concern us. The location rate per square meter might a little bit. So I want to make sure that's all lined up. So if we were going to do this, it'd be buying it sort of under some long terms, make sure we sort of really got our construction price done before we committed and see whether we could get the rates to catch it.
If I could do the whole building under 1.2 million, every apartment, it would fly. You could sell it twice over, I think. We wouldn't look at this. If we were to look at it, I bizarrely took a call on this morning and tried to get as much information as I could. I would look at this we're not, but I would from a build-to-rent perspective. I think it's got all the characteristics of site, scale. You can overcome, by and large, in financial feasibility model, you're not as heavily reliant on the sales and the things that you save on that build to rent, as long as you back the rental market, public open space, GST, you can solve down the track. I think this would become a viable development for us.
I agree with everything you've both said. Obviously, we are a divest because it doesn't fit within our wheelhouse, but I definitely agree with potentially being a build-to-rent type of site would definitely lend to this sort of location. For us, obviously, it's too big, and I guess location-wise, being on the train line, etc., would be a deterrent to our type of demographic, being that we're really not that investor stock type of market. We are very much that owner-occupier and a certain type of quality. We wouldn't be able to put the product that we necessarily wanted on that site, but I do think it could be developed in different methods.
Awesome. And
so, yeah, I think bizarrely as well, we've looked at a couple of things in and around Abbotsford, and they've got zero value on the building. I think we're also residential focused here, which is what we are. Again, alternative use, we've sort of turned our mind to a few sites recently backing last mile logistics. So these sites that are set up for, traditional warehousing or an industrial use, potentially they can be repurposed and rehoused because you can pick them up there through failed campaigns. This one's got a particular problem with a mobile tower that needs to be relocated on it. So I just think, don't shut your eyes off to some sort of last mile logistics use.
Interesting. And maybe just give us a bit of a flavour of what do you think the rest of 2026 is going to look like? What are the types of sites that you do think are a good fit for the current market? Obviously, we've heard the kind of lower price stuff, but any other thoughts you've got to share?
Look, I've never seen the year start so busy, to be honest. I don't know if that was I had an extra long break and 5 or 6 weeks off, so which was probably needed after the last couple of years, to be perfectly honest. I'm super enthusiastic. We've got 2 big sites under due diligence at the moment that work, which is great. It's been a long time since we've been looking at feasibilities that have, whilst not as much as we'd like, but have a layer of redundancy in it. I think the market needs to dynamically change, not back in our favour, but this is spurred on, by data and statistics, and that forms gut feel, and gut feel then goes out and sort of breeds that entrepreneurial spirit to go and back your volition on what your idea is. Never has the last 3 or 4 years been so detrimental to that way of thinking. It's been really hard to go in and go, well, I need every metric to go right. And inevitably, a lot have gone wrong. Your financing costs have gone up for obvious reasons. Construction pricing's gone up. Revenue stayed flat. Planning's taken longer. Who would be a developer? I think that tide is changing. And I think as an industry, all of us sitting in this room have a part to play in that. And a lot of it is just us pushing that narrative. Obviously, hopefully, not to get political, but we see a change in government, and I think that will spur on a lot of positivity. Positivity breeds positivity, and I think we've just got to continue to push it. But I am bullish for the back end of this year.
It's been a good start to 2026. We're pretty excited. Like you said, we've got a few projects that certainly stack up. Construction started on both. Sales are going really well on both. Not to say that the end's going to be easy, but we've got builders that we trust, that we've worked with before, so we're not expecting that experience to be an issue. We can focus on the balance of stock that we're going to have left in the two and just continue to chip away with those. During construction, on the planning side, that ministerial pathway is going really well for us. While there's a lot of work to do up front, a lot of detail, once you accept into the process, you've got absolute certainty to start your design development. By the time you get your permit, you can have as much of that done as you can, be ready to go to marketing as soon as you can. That certainty they provide, once they sort of invite you into the formal sort of lodgement process, is really comforting. So a bit of upfront work, we've got that to look forward to. Another one in sort of South Melbourne, Albert Park precinct. And I think that we need, like you said, a government change, interest rates not to go up too many more times, and just to try and get a bit more confidence in the Melbourne market, because compared to some of the national markets, it's a shame that people don't have more belief in wanting to be in Melbourne.
We are very excited and quite bullish, I suppose. We are continuing to grow despite market conditions. And I guess when you compare our market in comparison to all of the other states, the only way is up. It can't get any worse than what it is. But I think that what we're doing is we're really focused on acquisition. So if we buy the right site for our type of product, that really unique site, and find that scarcity, that's kind of the way forward for us. So we're really excited. We've got 3 really big projects, or unique projects, I guess, coming to market in the next couple of months. One being Maison Savoy in Brighton, which is the old Brighton Savoy Hotel, which is ultra luxury, 19 really high-end apartments pushing really, really high price points. And we've put a private Aurora spa and bathhouse in there just to try and kind of seal the deal. But we're really bullish in that you put really, really high quality product in a really unique location and people will buy it. It definitely takes longer to transact these days. People are Our purchasers are much more discerning. They take a lot longer. They need a lot more nurturing, a lot more guidance. But I guess that's why we have everything vertically integrated, so we can kind of control that narrative. But even with, we are taking to market in the next couple of months a larger project for us in Camberwell, which is closer to 90 apartments, which is actually really big for us. But we just sort of found with that location, it was the right demographic for us. And again, we've put another private Aurora Spa and Bathhouse in there, indoor-outdoor space, but 1,200 square metres of that just for the client. So I guess it's sort of looking at creating that uniqueness within any type of location. And even a couple of our projects that we've got in planning, which I can't wait to share hopefully very soon once we kind of get a little bit further. I think for us, we're really focusing on what we do best, and sort of as was sort of discussed previously, if you really focus on what you do well and not try, at this point in time with this market, we're not trying to diversify our product offering or do something different. We're just really trying to focus on what works for us and where our reputation is, and going from there.
Awesome. Well, I don't know about you guys, so I found that super interesting and helpful. So please, a massive round of applause to these guys.